Welcome to our deep dive into the trading world of Mitesh Patel. We're going to be dissecting his tweets and forum answers from 2018 to 2021. A fascinating period, where he really honed his craft.
Yeah.
It's not about giving you stock tips or anything, but rather kind of revealing how a successful trader thinks and adapts. Think of it as a window into the evolution of a trading master.
That's a great way to put it. We're not just getting kind of theoretical knowledge here, right? We're seeing his actual trade, reactions to the market's ups and downs, the advice he gave others in real time. It's a treasure trove of practical wisdom.
Absolutely. Okay, so let's rewind back to 2018. What jumps out at you from Mitesh's early days in these tweets and forum posts?
Well, in 2018, Mitesh was all about option selling, particularly a strategy called strangle selling.
Okay.
Now, strangle involves selling both a call option and a put option, both out of the money, on the same underlying asset. It's a bet that the market will stay within a certain range. He primarily focused on Bank Nifty weekly options, especially when the volatility index or VIX was low.
So he was essentially betting that the market wouldn't make any big moves.
Exactly. He had a very systematic approach,
Yay.
even turning strangles into straddles, buying both a call and a put option, depending on how the market moved. He claimed a 95% success rate with option selling that year, which is a bold statement to say the least.
95%. That's incredible. But do you think that kind of success rate is sustainable in the long run?
That's a great question. And I think what's interesting is that as we move into 2019 and 2020, we see Mitesh's thinking evolve. He started emphasizing the importance of understanding market direction and capitalizing on trends, moving away from purely range-bound strategies like strangles.
So instead of just betting on the market staying still, he started looking for opportunities to ride those bigger waves.
Precisely. He even mentioned shifting from futures to options as his capital grew, pointing out the difficulties of exiting large future positions. This highlights a key takeaway. Successful traders adapt their strategies as their capital and market conditions change. What works for a smaller account might not be suitable for a larger one.
That's an important point for our listeners to consider. It's not about finding one magic strategy. It's about constantly learning and adapting. So we see this shift from a rigid option selling approach to a more flexible trend-following strategy. What else can you tell us about Mitesh's core trading principles during this period?
One thing that remained consistent was his emphasis on price action and volume analysis. He repeatedly downplayed the use of indicators like RSI or MACD, preferring to read the raw data of the market through price movements and trading volume.
So he believed in keeping things simple, focusing on what the market was actually doing, rather than relying on complex indicators.
Exactly. He even championed what he called the single pattern approach, advocating for mastering one setup, like breakouts. Instead of jumping between multiple strategies, he believed this focus was crucial for consistent profitability. He had a lot to say about this in late 2019 and mid-2020.
I'm sensing a pattern here, simplicity-focused discipline. But he was dealing with significant capital, especially in those later years. How did Mitesh approach risk management to protect himself from potentially big losses?
His risk management philosophy is really insightful. He was all about tight stop losses, meaning he was willing to accept small losses quickly to avoid larger ones. He focused on the probability of winning, over solely chasing big risk-reward ratios.
Okay.
This shows a mature understanding of trading. It's not about being right all the time, but about managing losses effectively and letting your winners run. This idea appears early on in 2018, and he revisits it in 2020.
So he was comfortable being wrong often, as long as his wins were big enough to offset the smaller losses?
Yes, and this ties into his strong emphasis on discipline and mental fortitude. He believed in cutting losses quickly and moving on, never averaging down on losing positions. This is where many new traders struggle. They get emotionally attached to a trade and keep pouring money into it, hoping it will turn around.
It's like the saying, hope is not a strategy.
Right. Mitesh understood that removing emotion from trading is crucial for long-term success. It's fascinating how he brings the psychological aspect into his trading approach.
Speaking of the psychological side of trading, what insights can we gain from these sources about Mitesh's mindset and how he approached the mental game?
There's a recurring theme of prioritizing discipline, execution, and decisiveness over simply having theoretical knowledge. He believed that knowledge is useless without the ability to act on it decisively.
So it's not enough to just know stuff. You have to be able to pull the trigger when the opportunity arises.
Exactly. And he also spoke about the psychological impact of trading with small capital, stressing the importance of starting with a solid financial base and avoiding debt. Trading with borrowed money or under financial pressure can lead to poor decision-making.
That's a crucial point. Your overall financial health plays a huge role in your trading success.
Absolutely. He even had a rule for himself. No trading in futures and options with less than 5 lakh rupees. He felt that smaller capital could amplify fear and pressure, ultimately hindering performance.
This is great stuff. It's like he's saying, get your financial house in order, then focus on mastering your trading skills. But I have to admit, what I always find most captivating are those real-life stories, the anecdotes that give you a glimpse into a trader's journey. Did any of Mitesh's experiences particularly stand out to you from these sources?
Oh, definitely. There are a few that are truly remarkable. One that comes to mind is from April 2020, where he shared how he turned 20,000 rupees into 2.6 million in just 1 month, using high-leverage futures trading.
Wait, 20,000 to 2.6 million in a single month. That's incredible. Was he just incredibly lucky, or was there more to it?
Well, he attributed it to a combination of factors, including identifying a strong trend and using leverage effectively. But he was very clear that this was an exceptional case and highlighted the extreme risks involved. He even cautioned that it's very difficult to replicate.
So not exactly something for a beginner trader to try at home, but it does show the power of identifying those big trends early on.
Absolutely. On the flip side, he also candidly shared about a significant loss he experienced, a 2 million rupee loss on a single expiry day in June 2020. It's a reminder that even with experience, losses are an inherent part of trading. He used that experience to underscore the importance of stop-loss orders.
It sounds like he was saying, look, I've made a lot of money, but I've also lost a lot. This is a risky game, and you need to manage your risk effectively.
Precisely. It adds a layer of authenticity to his advice. He's not just some guru preaching from a pedestal. He's been in the trenches experiencing both the highs and lows of trading.
This is all incredibly insightful. We've uncovered so much about Mitesh's journey already. His early focus on option selling, his evolution towards trend following, and his emphasis on simplicity, discipline, and risk management. But there's even more to explore. We'll be back after a short break to delve deeper into Mitesh's world, examining his specific trading setups and how he adapted to the ever-changing market dynamics. Stay tuned. Welcome back to our deep dive into the trading mind of Mitesh Patel. Before the break, we were discussing some of his incredible trading anecdotes, the jaw-dropping wins and those humbling losses. It's refreshing to see a trader who's so open about both sides of the coin.
Absolutely. That's what makes these sources so valuable. We get a raw, unfiltered view of his journey, both the triumphs and the setbacks.
Okay, so we've covered a lot of ground already, but I'm curious to delve deeper into his specific trading methods. We touched on his focus on price action and breakouts. Can you elaborate on how he actually applied those concepts?
Certainly. He frequently shared real-time examples of his trading decisions based on these principles. In a September 2019 post, he discussed a pattern called the rectangle box, explaining how it can signal a potential market reversal. To simplify, imagine price bouncing between a clear support and resistance level, forming a rectangle shapes on the chart.
So he was essentially looking for those moments when the market seemed indecisive, trapped within a range.
Exactly. And then he'd wait for a breakout from that range, signaling a potential shift in momentum. A couple of months later, in November 2019, he shared a trade where he bought Tata Global after it broke out of a rectangle border, which he then used as a stop-loss level. He even shared the specific entry and exit points, giving us a real-time peek into his trading process.
Wow, so he was literally walking people through his trades in real time? That's incredibly generous.
It is. And what's interesting is that he consistently emphasized the importance of sticking to a single pattern. Remember his single pattern philosophy. He believed that mastering one setup was far more effective than trying to learn everything under the sun.
I see. It's about finding what works for you, understanding it deeply, and then executing it flawlessly, right?
Precisely. He reiterated this point in July 2020, stating that jumping between patterns is a major reason many traders struggle to find consistency. It's about finding your edge and sticking to it.
Okay, so discipline is key. Did Mitesh offer any specific advice on how to stay disciplined in the heat of the moment when emotions are running high?
He did. In December 2019, he shared a powerful insight about the psychological impact of trading with limited capital. He observed that traders with smaller accounts often feel pressured to make larger, riskier bets, to see substantial profits. This, of course, can lead to poor risk management and ultimately wipe out their accounts.
Ah, yes. The classic fear of missing out syndrome. You see others making big gains, and you feel this urge to jump in, even if it means taking on more risk than you're comfortable with.
Exactly. And Mitesh cautioned against trading with borrowed money, or when you're already in debt. He believed that financial stability was absolutely crucial for making rational trading decisions. When you're desperate for a win, you're not thinking clearly.
I love that he brought the financial aspect into the conversation. So many trading courses focus solely on strategies, but neglect the importance of overall financial health.
Absolutely. It's all interconnected. And he wasn't just talking about it. He had a rule for himself. No trading in futures and options with less than 5 lakh rupees. He felt that trading with smaller capital could create unnecessary pressure and fear, ultimately impacting performance.
So to recap, start with a solid financial foundation, master a single setup, and maintain unwavering discipline. These seem to be some of Mitesh's core tenets.
You got it. But it's not just about blindly following a system. He also stressed the importance of adapting to the ever-changing market conditions.
Right, yes. Remember his shift from futures to options as his capital grew. That's a perfect example of adaptation.
Exactly. And there's another example from March 2021, where he adjusted his option selling strategy. Due to the narrowing range of the Bank Nifty index, he recommended waiting for a breakout with substantial volume before making any aggressive trades.
So he was constantly observing,
Yeah,
analyzing, and tweaking his approach based on what the market was telling him.
precisely. This adaptability seems to have been one of the keys to his success. He wasn't afraid to change course when the situation demanded it.
That's a powerful lesson. So much of trading is about being flexible and responsive
Yeah.
to what the market is doing, not clinging to outdated strategies.
Absolutely. And what's even more fascinating is how he viewed the role of market operators, those big players with enough capital to influence price movements. Remember that anecdote from April 2021?
You mean when he talked about how a trader with sufficient capital could actually manipulate chart patterns? That was a bit mind-blowing.
Exactly. He gave examples of how he himself created significant buying volume in stocks like Tata Steel and Hindalco, effectively influencing their price action.
Wow, so it's like a self-fulfilling prophecy. You create the buying pressure, and others jump on board pushing the price up. That's both fascinating and a little intimidating, knowing that these whales have such an impact on the market.
It is. But Mitesh's advice was to learn to identify these operator moves, and if possible, ride the wave instead of trying to fight it.
So it's almost like a game of chess, right? You need to anticipate your opponent's moves and position yourself accordingly.
That's a great analogy, and it brings us back to his emphasis on understanding market direction. It's not just about technical analysis. It's about recognizing the broader forces at play, including the actions of these major players.
That makes sense. It's not enough to just look at charts. You need to understand the psychology of the market and the motivations of those who are moving the needle.
Exactly. And remember, Mitesh achieved all of this without relying on complex indicators or fancy strategies. He kept things simple, focus on the essentials, and adapted as needed. It's a powerful lesson for any trader, regardless of experience level.
This is fantastic. We've uncovered so much about Mitesh's journey, his early focus on option selling, his later emphasis on understanding market direction, and capitalizing on operator moves, and his unwavering belief in simplicity, discipline, and adaptability. But I'm sure there's even more to glean from his insights. We'll be right back after a short break. To wrap up our deep dive into the world of Mitesh Patel, stay with us.
Welcome back to the final part of our deep dive into the trading world of Mitesh Patel. It's incredible how much we've learned from just a few years' worth of his tweets and forum posts. You know, he was so open and willing to share his experiences, both good and bad. It's not something you see every day, especially in the often secretive world of trading.
Yeah, no, it really is. It speaks volumes about his character and his desire to help others. You know, he could have easily kept all this knowledge to himself, but he chose to share it with the world. That's something I really admire about him. Absolutely. Okay, so we've discussed his strategies, his risk management techniques, his mindset, and those wild stories of massive wins and losses. I feel like we've really gotten to know Mitesh through these sources. But before we wrap up, I'd love to hear your overall takeaways. What are the most important lessons someone could learn from Mitesh's approach to the market?
Well, I think one of the biggest takeaways is the power of simplicity and focus. You know, Mitesh didn't get bogged down in complex indicators or fancy strategies. He kept things straightforward, focusing on price action, volume, and mastering a single setup. That's a powerful lesson for any trader. It's easy to get overwhelmed by all the information and tools available these days, but sometimes the simplest approach is the most effective.
Yeah, it's like he was saying, cut through the noise and get back to the basics.
Exactly. And along with that, he was incredibly disciplined and adaptable. He had clear rules for managing risk and wasn't afraid to change his approach based on market conditions. or his evolving understanding of the game.
Yeah, he was always learning and adjusting his strategies based on what the market was telling him. That kind of flexibility is crucial in a constantly changing environment like the financial markets. But even with his experience and success, he was humble enough to acknowledge that losses are inevitable. You know, his story about that 2 million rupee loss on a single day is a powerful reminder that risk management is absolutely essential.
Right. No trader is immune to losses. No matter how skilled or experienced they are, the market can always surprise you. What sets successful traders apart is their ability to manage those losses, learn from them, and come back stronger.
Yeah, it's about having the mental fortitude to weather those storms and come out on the other side.
Precisely. And I think Mitesh's insights into the role of market operators are invaluable. He was very open about acknowledging the influence these big players have, and even shared strategies for identifying and capitalizing on their moves. It's a level of market awareness that many traders, especially beginners, might not even be aware of.
Right. It's like he was saying, don't fight the tide, learn to identify those powerful currents and ride the waves.
That's a great way to put it. And remember, all of these insights came from someone who, at least initially, was a proponent of selling options and profiting from a range-bound market. His journey underscores that success in trading isn't about finding a single holy grail strategy. It's about constantly learning, adapting, and having a deep understanding of market dynamics.
This has been an incredible deep dive. I feel like we've gained so much from exploring Mitesh Patel's trading journey. But before we let you go, I'd love to leave our listener with something to ponder, a final thought that might spark some further exploration or self-reflection. What would you say to them?
Well, building on that last point, I would ask our listener to consider this. How can you incorporate this idea of adaptability into your own approach to investing or understanding the market? What are you observing in your own trading or investing? That might require a shift in your thinking or actions. Are you clinging to strategies that are no longer serving you? Are you ignoring signals that the market is sending? These are all important questions to ask ourselves as we navigate the ever-changing landscape of the market.
That's a fantastic question to leave our listeners with. It's a reminder that we should always be learning, growing, and refining our approach as we navigate the market. A huge thank you to you, our expert guide, for sharing your insights with us today. And to you, dear listener, thank you for joining us on this fascinating deep dive. We hope you found it as insightful and thought-provoking as we did. Until next time, happy trading.